Good morning, everybody, and welcome. We are live here at Benzinga, and today we are going to be discussing how to navigate the evolving cryptocurrency landscape in the Chicago Board of Options Exchanges digital asset offerings. I'm Gianni DePoce, and I'm very excited to be live here with you today, especially given what's going on in the cryptocurrency market. I mean, have you seen the price of Bitcoin? Have you seen the price of Ethereum? And I'm very excited to have Nishank Modi here with me from the Chicago Board of Options Exchange because we are going to be discussing how the options landscape is being completely transformed in a new asset class for you to trade through options. The market's being made. So it's a great opportunity. There's big price moves. Learn how to hedge, learn how to speculate. And we're going to get into all of that and more today, as well as talk about kind of the technical structure that we are seeing in some of the crypto markets currently. So I'm very excited to be live with you here today. Let's go ahead and bring on Nishank. Nishank, good morning. How are you today?
Hi, Gianni. Thank you for the great introduction and for putting this session together.
Oh, it's so great to have you on, and I'm so excited to run through what Cboe has built out recently. Very exciting, basically legitimizing the asset class of cryptocurrency. So let's go ahead and get into it.
Absolutely, right? Like you mentioned, we're trying to democratize the access to crypto derivatives for everyone, not just for retail or not just for institutional, really for everyone. As we get into it, let me first start with a short introduction, right? I'm Nishank. I've been with Cboe for 4 years. I work in a team called Cboe Labs. It's a really cool team. What we do is we come up with new products, with new services. We try and find gaps or holes in the market and really come up with stuff that no one's done before and create it. And that's it, right? Now you have a new product. So that's what me and my team, that's what we do. Let's as we start, right? I'd like to walk you guys through what is Cboe, what is the role that Cboe plays in the financial markets. We'll move on to some trends that we're seeing in the crypto markets. Gianni mentioned there's been some price movement. That's an understatement. We'll move on from there to some of the market structure and how that's evolved. And finally, we'll talk about some of Cboe's products in this space. I really want to focus on some of the case studies. How can you use those products as an end client, as a consumer? What are some of the vehicles to use it? Can you do it yourself? Should you use some wrapper to do it? But we'll get into all of that. Let's start with what is Cboe. So Cboe is an exchange. We've been around for 50 years. We were founded about in 1973 as the first U.S. options exchange. And really, we're known as the home of volatility, right? So we're best known for the VIX index. We also trade the SPX. Over time, we've grown our presence from being just an equity option exchange to now trading derivatives, equities, FX, and we do this across North America, Europe, APAC. We're really trying to redefine what it means to be in the financial marketplace, not just in one jurisdiction or the other, pretty much across the world. I mentioned some of the markets. We actually have 27 markets across different jurisdictions, across different asset classes. Our listings team puts up, new ETFs and new corporations in 5 or 6 different marketplaces around the world. It's all backed by Cboe Titanium. That's our in-house technology platform. We have a large data team that really captures the data that we create and our users create through the exchanges, right? We package that up, and then if you want, you can get access to that data. So let's go through some numbers. We have 12 offices. We're headquartered in Chicago, but our main offices are New York, Kansas City, Toronto, London, and Amsterdam outside of Chicago, obviously. Some of the big numbers here: 70 billion in the average amount that's traded. $70 billion, right, on our equity exchanges. That's not options. That's our equity exchanges in the U.S. The same number in Europe. That's 14 billion euros. Our options, which is what we're best known for, we have 18 million contracts. That's not notional. That's actually contracts. Right? Most people who trade options will realize there's a 100 multiplier there once you start converting that to a notional. And our futures exchange, that's 5 billion in daily notional that's traded. So who do we cater to? We cater to all kinds of clients. I think this slide may have broken down, but it's only showing you the retail investors. We do cater to retail. We cater to institutions. We cater to pensions. We cater to the insurance firms, to the market makers. Really, Cboe is we're going after all the different clients um, that are in the financial ecosystem and providing some service or some product for each one of them. With that, right? So now that I've given you a background on what Cboe does, let's really talk about what's happening in the crypto space, and from there we move on to Cboe's role in it. As we move through these sessions, if you guys have questions, please feel free to ask those questions. Gianni and I had a chat prior to this, and we discussed that we'd love all questions. As they come in, we'd be happy to try and answer as many as we can. But we'll also be answering questions at the end of this, right? So we'll finish these sessions, we'll do a Q&A at the end. Whatever you feel most comfortable with. When I sit through webinars, I forget what questions I need to ask by the end. So if you have a question, put it in the chat. Right. Let's start with trends. And I put this slide together 10 days ago, and it shows how much the markets have moved. In 10 days, the BTC trading between 104 to 110. Well, we all know it's crossed 120. It was a 123, I believe, a couple of days ago. We're trading right below the 120 mark today. It's really been some sort of a move. Obviously, Bitcoin remains sensitive to geopolitical tensions. The recent sell-off right below the 100K mark was quickly bought up. I saw President Trump tweet about Crypto Week, and or I don't know what's the word now instead of tweet, but you know what I mean. And that's been a big focus area this week, right? Like what are the bills that are being discussed in the Congress? The Genius Act, the Clarity Bill, the CBDC bill, or the anti-CBDC bill. So there's I don't claim to be a policy expert, but I do know that these things move the price of Bitcoin. They move the optics on Bitcoin. So if you trade Bitcoin, if you follow Bitcoin, what's happening on the regulatory space is important for you to follow as well. This has been discussed a lot, but I still bring it up. Spot Bitcoin ETFs really changed the market, right? The adoption of those spot Bitcoin ETFs has been phenomenal. I've seen some stats on how some of those ETFs now have 80 billion in assets, or 90 billion in assets, 100 billion in assets, and are the quickest to get there across any asset class, across any ETF ever in history by a large margin. So that to me, just shows that there's a pent up demand for Bitcoin, and the demand comes from people who want to be able to access it or buy it or trade it in a form that they are used to buying and trading securities or equities or ETFs, right? And the fact that you have these 10 or 12 different spot Bitcoin ETFs now just gives you that access. So we saw 4.5 billion in inflows in July, right? That kind of shows that the institutional confidence hasn't gone away. We're still seeing institutions come in and buy more Bitcoin. The total crypto market cap grew by 2.6% in June. We're seeing crypto performance, very, very solid crypto performance, even outside of the Bitcoin space, right? So as of 10 days ago, I had Ethereum up 34% over 90 days. Solana and some of the other names were also showing strong momentum. Regulatory focus, I mentioned this earlier, right? That remains top of mind for most serious investors. What happens in Congress, what happens with US policy, the SEC crypto task force, that's another moving part. I think these are important. It's not just the US that we need to look at, it's the global landscape. So the CBDC pilots or central bank pilots, right? Like for currencies, right? And we're seeing these in Brazil and UAE, where they're leading with these CBDC pilots. It's an open question whether countries like the US or China would adopt it or not, but we'll leave that at that. So as we move from crypto trends into an evolution, let's discuss, what were some of the challenges first, right? You had to typically go to a non-traditional provider, open a new account, go through KYC, pay large amounts of fees, spreads, and you may not have had the confidence of knowing that name or knowing the platform or being confident in where you're putting your money, right? So there were limited institutional grade Bitcoin derivative products. The operational complexities were extremely high or fairly high for what was on offer. The next point on liquidity also bears to reason. When you have fragmented liquidity, it really makes it hard to then know which one of those ETFs to go to or which one of those non-traditional, non-listed products to go to for buying or selling or trading derivatives or options on Bitcoin. And this is where we identified the need to have a standardized Bitcoin risk management tool. Our solution, Cboe solution, is to create that index option that we best know. Like I said at the very, very start, we're best known for VIX options, VIX futures, and for SPX options. So we're trying to take that, take that framework, right, and apply it to Bitcoin and say what's worked really well for us, what's worked really well for our clients on the institutional side and also on the retail side, and how can we transpose those, how can we apply those same logics, the same learned takeaways into the Bitcoin world, right? Our first and biggest takeaway was we need a regulated cash settled Bitcoin exposure product, right? So regulated is important. It has to come through all the different regulatory bodies, right? And a lot of people who want exposure to Bitcoin don't necessarily want to be long the actual coin or long some physical ETF or a stock that's attached to it, but they would still like the exposure that comes from having optionality on Bitcoin. You get that by having a cash settled Bitcoin option, right? So that's what we're trying to solve for. You want a simplified framework. You want something that you can look at and say, okay, this gives me spot Bitcoin options exposure. That's it. Doesn't get crazier than that. And the next point is, we spoke about liquidity being fragmented. If you were able to consolidate that liquidity from the different spot Bitcoin ETFs and create an option that represents the combination of those, that's one of our goals. And then eventually to have standardized tools for institutional portfolio management. So I walked through what the challenges were. I walked through what our solution is, and I would now walk through what the end product is, right? So we created the Cboe Bitcoin US ETF index. It's called CBTX. If you pull it up on Fidelity or TD or Bloomberg or whichever your platform is, you should be able to see it under CBTX. There's two different products. We've also launched the mini product, which is MBTX. It's the exact same as CBTX, except it's 1/10 the size. And the reason for that is some people like the bigger notional. They pay lower commissions on it. Some people like the smaller notional. It gives them more flexibility in getting the exposures that they want. But let's start with CBTX and what exactly is it, right? So it's a modified market cap weighted index. It takes 11 different ETFs. As of May 1st, it takes 11 different ETFs in roughly equal quantities, and you can see that on the table on the right. So IBIT, GBTC, BTC, all the big ETFs, right? So all the household names, you combine them in equal weight into one index. And by doing that, what you get is you get an index that tracks the spot Bitcoin price. The correlation that we see with our index, with CBTX to spot Bitcoin, is 99% right? It's highly correlated with spot Bitcoin. We have a transparent pricing mechanism, and we regularly rebalance this portfolio or this index to make sure the market representation stays true. CBTX does remain a bigger product, a bigger notional product. It's typically adopted by institutions because they want the larger notional. For people who are looking for the more, for the more in between notional, right? Like something smaller than where you can get with CBTX, we have the 1/10 product, which is MBTX, or the mini Bitcoin US ETF index. And you get that flexible position sizing. It's lower capital requirements. Obviously, with the lower capital requirements, you're also getting lower notional, right? So one goes with the other. But it really it caters to more diverse market participants. So we walked through some of the problems, some of the solutions, right? Let's see how these products that we spoke about, how does it solve those those problems, right? How does it apply to the solutions that we were trying to create, right? So the first thing is these are cash settlement products and they're European exercise. Um, to me as a retail trader, when I'm putting on my retail trader hat and trading options, those two are very, very important points. When I'm trading Bitcoin options, I want the cash settlement, which means when my option expires at expiry, it's going to settle into cash. If it's in the money, I will get the difference between what my strike is and where the stock closes, right? So and if I have to collect money, I'll collect money. If the option goes against me, I would pay money. But that calculation and that transaction, it takes place in cash, so you don't have exposure or you don't have any risk to that instrument after expiry. That at expiry, you settle your transaction and you walk away. And that's the beauty of cash settlement. It's also one of the reasons why SPX options and XSP options have become so popular, especially on the shorter dated side, is because they settle into cash. And once you settle them into cash, you don't have any more risk beyond that, outside of making sure you fulfill your cash requirements, either collecting or paying. So these trades settle in cash at expiry, right? They eliminate the unwanted physical delivery of Bitcoin ETFs. It also takes away the early assignment risk. So if you're a professional options trader, or if you've been trading options for a long time, you already know what early assignment risk is. For those of you who don't, when you're short options, when you're short listed options of any kind, especially on the call side, but it could be on the put side, right? When you're short options, you always have the risk of getting assigned or getting early assigned on those options. What that means is, if you're short a call option and you get assigned early, you then have to provide stock in the ratio in which you're short. Or if you're short a put option and you get assigned early, you have to then accept stock. You have to buy that stock or the ETF that you're short on. That is called American exercise, or American style exercise. The vast majority of the options that we trade in the US are American style exercise. Some options like SPX, VIX, and then CBTX and MBTX, these are European style exercise, right? So what that means is you cannot get early exercise. You can only get exercise at expiry. It does not mean you cannot trade those. You can obviously trade those at any point between now and expiry. You can buy it, you can sell it, you can trade out of it. But you will not have any surprises in early exercise. I see Gianni nodding. He's seen an early exercise or two in his time. The next factor is, as you have institutional adoption, they also want reduced counterparty risks. You don't have a single point of counterparty risk in the form of one corporation or one firm, right? All of these trades are cleared by the central options clearing corporation, right? Which is where all of the U.S. options, all the listed U.S. options trades go through. So when you trade Apple options or Tesla options, when you trade NVIDIA options or SPX options, those are all cleared by the OCC, the same way as CBTX and MBTX options are cleared by the OCC. That's an extremely important point, right? That you're in the main ecosystem. You're in the main system that you would use to trade options of any kind. You're not in some in some new channel that you may or may not have knowledge about. You then also have the flexibility of trading different kinds of option expiries or different options. So what that means is, you get access to the standard monthly as well as the end of month options, right? So you can get the third Friday options. You also get the end of month options. And most importantly, you get access to flex options, where Cboe really excels. And using a flex option, you can create a flex option. The best way to think about a flex option is it gives you the flexibility, or it gives you the advantages of OTC trade, over the counter trade, while still keeping it a listed trade and clearing clearing through the OCC. So with the flex option, you can choose your strikes. If you want it to be I'm going to make this up, the 214.5 strike, and it doesn't, and that's not listed, you can actually create a flex with that exact strike. If you want it to be the exact 5% out of the money strike or at close of business on July 17th, right? You can create a flex option that is, 5% out of the money call, right? As of closing price today. You can also choose which expiry you want, right? You can choose the exact date that you want. You want it 3 days from now, you want it 23 days from now, you want it 69 days from now. Whatever date you choose, you can choose those dates. You can choose the parameters, and you can trade that flex option with a variety of market participants. And then you have targeted exposure, right? So it's 1/10. The MBTX is 1/10 the notional of the standard CBTX. It really lets you choose how much exposure you want, and it lets you really create that portfolio into a manageable bite-sized portion or a large portion, depending on what you're trying to accomplish.
Awesome. Nishank, we have a couple of really good questions in chat that I would
Please.
actually like to bring up right now, because I think it's a good time to do so. DL asks, you refer to the Cboe cryptocurrency contract as margin futures contract, but aren't all futures contracts margined, and aren't initial margins pretty high in the 50 to 60% range? Now, we're talking about something a little bit different here, but Nishank, I'm going to have you explain this to DL.
Absolutely. DL, great question. We're actually talking right now about the options that Cboe offers. We do offer futures. I'll come to the futures right after our options case studies. And when we talk of margin futures, right, it's important to know what asset class we're talking about.
Yeah.
So in the crypto space, the ability to offer margin futures in crypto is a big win for the industry, not just for Cboe. This wasn't always taken for granted. The fact that we can get this is pretty cool. The initial margins depend on which platform you use, what the strategy is. There's a lot of different calculations that go into it. I don't want to comment on whether it's high or low, but it is what it is.
Yes, so it depends on the exchange or even your broker on what the margins are going to be. So,
exactly.
Yeah, that's a good question. Yeah. And then here's another quick question from DL that I can even answer. Are altcoins everything except Bitcoin? Pretty much, yes. Ethereum's kind of at the king, or I guess the prince of the crypto landscape or infrastructure or hierarchy, if you will. And yes, so pretty much everything else aside from Bitcoin is considered an altcoin.
Yeah, Gianni, I was listening to a podcast on my commute into work today, and they were talking mostly about the regulatory stuff, right? About the crypto week and the 3 bills that are in Congress.
Yeah.
But one of the conversations, it spun out, and they were talking about how Bitcoin is anywhere from 60 to 70% of the market cap of all crypto.
Right.
Right. While the amount of attention and lobbying it gets on Capitol Hill is less than 10%. Right?
Yeah.
Everything else goes into the altcoins. Right. So
yeah.
there's some head scratching there.
Well, there's been a lot of innovation in the crypto space. That's a totally separate discussion to be had. But yeah, I mean, Ethereum is, I know you're going to be talking about that, or at least I'm going to be asking you about it.
Of course.
Because I know that you guys, I've had some things in the background, so I'm curious if there are any updates on that front. But anyways, continue.
Fantastic. DL, great questions. If anybody else has questions, please keep them coming. All right. So I spoke about use cases, right? These are important. Why would anyone use Bitcoin options, whether it's Cboe's Bitcoin options or anybody else's Bitcoin options? But why would anybody use Bitcoin options? It's the same reason why anybody would use options, right? Options gives you more choices. It gives you more alternatives. It gives you a better way to, most times, it gives you a better way to express your views, right? And lets you express it in a way that lets you get to your investment goals. So now, when I'm going to talk through some of these use cases, let's start with the first one. Why would I use Bitcoin options? I use it to hedge downside Bitcoin exposure. So what does that mean? If I'm long a lot of Bitcoin and I'm concerned that maybe this crypto week isn't going so well, maybe these bills will get rejected by Congress, and maybe I'm concerned about some of the political will changing. I'm concerned about something else happening somewhere else in the world. It could be anything, right? Maybe I just want to hedge some of my downside exposure in Bitcoin. Well, one way to do that would be by buying puts, right? A put option gives you protection. It gives you insurance on the downside. You could potentially buy put spreads, which means you're buying put and selling a put further beyond, and that cheapens that cost of hedge. You could make it a put spread collar. Now we're getting into slightly more complex option strategies. But there's a reason I'm going there, right? So put spread collars are you're buying a put spread and you're selling an upside call And by doing that, you're giving up some upside beyond a certain level. Let's say up beyond 30%, you don't make any more on Bitcoin, but you're protected from where Bitcoin is now all the way down to minus 20% drop from here, hypothetically, right? That's the kind of structure a lot of people don't mind, right? Because it lets them participate in the upside. You make money as Bitcoin goes up to a certain level. It also provides you with a large amount of protection on the downside, not unlimited protection, but a large amount of protection. And these are, what I just described now is roughly speaking what a buffered strategy is, right? So a buffered strategy is one where you get some protection on the downside and you give up some upside in return. You can use these Bitcoin options that Cboe created, right, and create your own buffers to get that protection for your portfolio. Now, let's say you aren't necessarily very sophisticated in trading options, or you don't want to dedicate time to do that. Well, in that case, you can use many different ETFs that already use Cboe's options on Bitcoin to give you exactly that. So if you go and Google up buffered ETFs on Bitcoin, right, you'll see a whole host of options which will give you different structures. The 180 versus 120 structure, the 80-90 versus 150 structure. There's all these different structures, and once you understand what are the numbers you're reading at, you don't then have to trade the options yourself. You can buy and sell the ETFs to give you that exposure. So some update on that market, right? There's about 24 different ETFs that track Bitcoin and use Cboe's Bitcoin options to give these kind of use case exposures that I'm talking about. At last count, there was 1.25 billion in assets in those ETFs. So this is a large set of large and fast growing set of ETFs that use these options. Right, so let's go to the next use case, right? You can express directional views on Bitcoin's price movements. So what does that mean, right? Well, if you were to do directional views just using Bitcoin, you'd say, I'm going to buy Bitcoin if I think price is going to go up, right? I'm just going to keep holding it if I continue thinking it's going to go up. If I think it's going to go down, I'll sell my exposure, or I may even short it, right? I may even go short Bitcoin if your platform lets you do that, and be bearish or be negative on the price of Bitcoin. Well, you can do all of those things in a slightly more targeted manner using Bitcoin options, right? So, we spoke about hedging your downside risk. Now you can buy some upside. I could buy a call option, and that gives me upside exposure to Bitcoin. Now, obviously, Bitcoin moves around quite a bit, so volatility on Bitcoin options is somewhat high. It's actually lower than it used to be when these options were first listed. Yeah. The implied vols
thanks to options. I would say thanks to options.
Exactly. Right.
Yeah.
Thanks to options, and I believe there's a decent amount of vol selling programs now on
absolutely
on Bitcoin that's looking to harvest Bitcoin volatility. Again, using many of these Bitcoin options that we spoke about, right? Cboe's Bitcoin options. But again, you can buy a call option. Those are not cheap. You can still buy a call option, and it gives you exposure to the upside. Your downside exposure is limited. The most amount of money you can lose by buying a call option is the premium that you paid for it. So if you think in terms of Bitcoin pricing, let's just use that instead of the ETF. Let's think of Bitcoin. If Bitcoin's trading at $120,000 to $120,000 to a coin, right? And you buy the $120,000 call option. Let's say you pay $5,000 for it, right? So you paid $5,000 to go long or buy the 120K Bitcoin option, call option. The most you could ever lose on that is $5,000. Okay. Let's say Bitcoin goes to 150,000. So you made 30,000 on that, right? 120 to 150. You made 30,000 on that. You paid 5,000 as your cost. Your net gain on that is 25,000. Okay. Let's take the reverse situation. Let's say Bitcoin falls from 120, it falls down to 100K. Right? It's a 20K fall. If you were just long Bitcoin, you lose 20,000 by doing that, right? Because you bought it at 120. It's now trading at 100. You're looking to sell it. You've taken a 20K loss there. If you were doing this through options, the most you could lose was the 5,000 that you paid for the 125 calls, right? So your loss is capped at that 5,000 or the premium that you paid to go long those calls. And that's what we mean by, you can express directional views on Bitcoin's price movements. You can do that in a targeted way. You could use calls, you can use call spreads, you can use all sorts of really fancy ways to do this. And there's some ETFs that are now catering to this. It's a slow growing. It's slowly picking up because most of the ETFs were really looking to hedge your downside risk or buffer protect, or income generation, which I'm going to talk about as the next use case. But this levered, showing more leverage to the upside while keeping your downside risk as capped. That is what one of the ways you can use options for. Right. So let's get into implementing income generation strategies. Gianni, you and I just discussed, right? Like implied vols have come in.
Right.
I think part of that is the space maturing. There's more
Absolutely.
players, right? There's more players. There's ETFs that offer options. There's index options now on Bitcoin, and there's ETFs that offer Bitcoin and options embedded in them. So there's a whole ecosystem of people that are looking to harvest this volatility. And as that happens, the space is maturing, but there's also price discovery. So if you're a market maker, if you're a dealer, and you're one of the only people that's trading it or making prices in it, you're kind of unsure of where the pricing should be, and you want a very large premium to be able to buy or sell optionality. That's natural. That's just what happens. As more and more participants come in, and there's more price history, as people know, at least using the past 2 years, using the past 5 years, people start seeing how these options are behaving on the realized side or on the historical side as stuff that's already happened. They can use that as inputs, as data to feel more comfortable with a implied vol regime that may not be extremely high. Now, that's not to say it's going to stay where it is today, right? Implied vols change all the time, and they change for a reason, right? They're reflecting a future expected volatility. So if there's a big event happening that we all know about, the future expected volatility will be pretty high. Gianni, you have a question?
Yeah, we actually have a couple questions. I'm going to be able to summarize it in one along these lines. What are some of the brokers that offer these options on this index?
Honestly, I think most of your major brokers should offer these options. I trade Fidelity for myself. I trade MBTX, CBTX options on Fidelity. Okay. But if all of the major platforms, I don't want to start.
Is it on Schwab too? Do you know?
I'm almost certain it is. I don't want to say for a fact just because I haven't personally used Schwab. Again, it really should be on all of the big platforms.
Okay, it was just like I'm responding to someone in chat.
Fantastic.
Okay, very good. Thank you.
And again, in all transparency, right? Like you have a lot of choices for Bitcoin options, right? If you own one of the different ETFs, it may be advantageous for you to use those Bitcoin ETF options. Let's say you're long IBIT, and you want to trade IBIT calls as a covered call strategy. There may be a case where that may be advantageous for you, right? Because it provides better marginal relief. It provides lower capital requirements. But for the most part, right, none of those options offer a cash settled variation. And that's where the Cboe option suite really differs or stands out, in the fact that all of these options that Cboe offers, they're cash settled and European style exercise. It makes risk management that much more robust.
Excellent.
Okay, so we started talking about income generation. These are typically the call writing programs or the buy rights. What a buy right means is you're long stock, so you're long some Bitcoin and you want to sell an upside call against it in order to create that dividend stream or synthetic dividend stream or synthetic income stream from selling premium. There's an old saying in the options world that there are no free lunches. You can't just create a income stream out of thin air. You have to give something up in return, right? And what you're giving up in return is the upside. So if I sell the 20% out of the money call, right, and I collect 3 or 4 or 5% in premium up front, that feels really good. And you're hoping that your stock, your underlying index, does not appreciate more than your call strike at expiry, right? if Bitcoin were to magically double from today to tomorrow, you would not be that happy, except that it's a covered call. You still make your 20%, but you lost out on the other 80% of upside that you could have had.
Yeah.
So it's an important distinction to note, right? If you sell covered calls, you collect that upfront premium, and it's great, but be very aware of what strike you're selling and how much out of the money it is. And if you're comfortable with those levels, especially if you're comfortable with giving up gains beyond that level. So the last two use cases, right? We enhance portfolio diversification, right? You get access to a different asset class. You get it in the form or in a manner that is consistent with what you've already been using, right? So if you trade Schwab and you have your equity account there, you can add your Bitcoin exposure to it, through these options straight in your Schwab account or your Fidelity account, and you get greater capital efficiency to the crypto market exposure. Now again, the capital efficiency piece, depends on how much margin you need to put down or how much capital requirements there are. That does depend from platform to platform. The exchanges, right? Cboe will have its own rules, and then beyond that, the platforms will implement a second set of rules, which is at least that of Cboe's rules or higher. So be aware to check what is the capital requirements for these products on your platform, so that there's no surprises later.
Awesome.
All right, so we spoke about Cboe's Bitcoin options. Let's compare and contrast our Bitcoin index options versus a typical Bitcoin ETF option. Right, so the major players in the market all offer options on Bitcoin ETFs. They are very popular, right? So we'll figure out what's the difference between the Cboe product versus the Bitcoin ETF product, and why you would use one versus the other, right? So from a utility perspective, right? Cboe offers the standard and the mini size, and it really makes a big difference on position limits. I'm going to get to that in a second. For spot Bitcoin ETFs, your position sizing and maintenance, it depends on the underlying ETF's price, and it depends on the listed expiries. Okay, so next one, we spoke about flex options and some of the additional possibilities or parameters that you can get access to using flexes. Are they available at launch with Cboe's options? Yes, right. With the ETF options, no. Position limits is really important for institutional players, might not be as important for retail players. And the reason for this is, if you trade spot Bitcoin ETF options, your position limits are capped at 25,000 contracts. So if you're trading a large book and you need exposure to Bitcoins beyond a certain level, you can only go up to 25,000. Using Cboe's options, you can go up to 24,000 for the standards and 96,000 for the flex options. And don't forget, the 24 and 96 apply to the standard and the mini size both, right? So our mini size is about 3 to 4x the size of the ETF. Our standard size is 30 to 40 times the size of the ETF. So it's a much larger contract. So you can get much more exposure to Bitcoin in the index form or in the ETF form by using Cboe's options. Settlement style, we've spoken about this enough, but it bears to say these are cash settled options from Cboe. The ETF options are physical delivery of the underlying ETF. For Cboe options, you can get the option of AM settled options or PM settled options. And what I mean by that is, you have certain options that expire in the morning, right? So on the opening print at 9:30 a.m. Eastern time in the morning, or you have options that expire at 4 p.m. Eastern time in the evening. Those are called PM settled options. So with Cboe, you can get both varieties. With the ETF options, it's typically only the PM settled options. Your exercise, you have European style exercise with Cboe's options, which don't have any early exercise risk. With spot Bitcoin ETFs, you have American style options, so you have early exercise risk there. And then the underlying asset, this is really interesting. The index that we created, I showed you those 11 constituents. It's a basket of spot Bitcoin ETFs. It's rule based, and you can always look into what the constituents are on our website. I'll actually be sharing some QR codes at the end of this presentation. The QR codes will will take you to the product pages on the Cboe website. So if you have more questions, if you have, if you want to get more details, you can always look it up there, right? So, Gianni, correct me if I'm wrong. Are we going to share these slides at the end?
Yes, we are.
Fantastic. Yep. All right. So, we mentioned the notional value, right? I mean, the chart says it all, right? Like the Cboe, the big index from Cboe, right? The CBTX index, that's roughly a $220,000 notional. Our mini index is a 22,000 notional, and the spot ETF options, they depend which one you look at, but they're roughly in the 5,000 range in terms of notional. So if you're looking to get exposure to Bitcoin at 100K level on notional for options, right? You can use the mini Bitcoin options and trade 4 or 5 of those, and really get that exposure by having lower number of contracts and lower commissions. If you're trading, 500,000, you can trade a few of the large ones. However, if you're trading the spot Bitcoin options, you've got to trade multiple X's of the contract, and it starts racking up the bills. This chart, I would say refer to it once you have the slide. It's a lot of the technical details. We don't have to necessarily go through it, but it shows you all the details that we spoke about, right? What's the ticker chain? Are they AM or PM settled? When does the settlement happen? What's the approximate notional value? What is the exercise style? What is settlement style? Like, in case you forget any of that, this table is meant to be a handy reminder of, hey, look it up. You have all the details here. All right, so that's my prepared remarks on the option side, right? So we spoke about CBTX and MBTX, which are Cboe's Bitcoin options. These have been extremely popular with our ETF providers. They've seen a gap in the market where they think there's clients or investors would like access to options-based strategies on Bitcoins. And they may not have the expertise or the time to manage those strategies themselves. So instead of doing it yourself, you can pick up any one of those ETFs, right? That suits your investment goals, and those ETFs are then mostly based on Cboe's Bitcoin options, right? So I mentioned there's 24 different ETFs at current count and more in the pipeline, with over $1 billion in assets. All right, so let's move to our futures. So we've launched a few months ago, maybe 6 months ago. Time flies. The Cboe FTSE Bitcoin Index futures, and these are great, right? They give you a way to get exposure to the Delta One product, which means the actual underlying. If you just want exposure to the Bitcoin futures or just to Bitcoin, you can buy these futures. We've modeled it on the FTSE Bitcoin Index, and it's 1/10 the value of that. By keeping it 1/10, we think the contract size remains somewhat manageable. It's a tactical size. You don't have to commit too much capital, and you can pick and choose how many you want. They are capital efficient in the sense that they settle in cash. You don't have the complexity of physical Bitcoin delivery, and your portfolio management, your risk management gets much more straightforward. You have flexibility in hedging it. What I mean by that is you can use these to hedge the exposure that you have in your spot Bitcoin, your Bitcoin ETFs, your Bitcoin options, or any other kind of Bitcoin futures. You can use these futures to hedge that overall net exposure. And then finally, it's a regulated marketplace, and this is important. These are offered to trade on Cboe's futures exchange. It's called CFE, right? And they're cleared through OCC. So if OCC rings a bell, it's because we spoke about it earlier, right? Our options, our MBTX and CBTX options also clear through OCC, the same as our Cboe FTSE Bitcoin Index futures. So your clearing stays the same across all 3 of those products. And what are the use cases, right? For depending on who you are, like for asset managers, for hedge funds, or trading firms, you have different use cases. We think these are primarily institutional products, or they would primarily cater to institutional clients. So if you're a asset manager, you use it for diversification with smaller exposure, and you use it for hedging. If you're a hedge fund, right, you can get tactical trading with 0.1 BTC. You can also look at these products for arbitrage opportunities, and you can pair it up with different ETFs. And if you're a prop trading firm, right, it gives you liquidity provision across Cboe's Bitcoin products. The earlier products we mentioned clear through OCC, these clear through OCC. So it gives you that that liquidity provisioning. You can execute those strategies with lower capital needs, as you know, as long as your prime broker or your platform lets you do that. We can skip this. We'll go to cash settled crypto futures. You know, these are slightly different from the previous set of futures I mentioned. Right, the FTSE Bitcoin futures clear through OCC, right? The financially settled futures, FBT and FET, so on Bitcoin and Ethereum, these are CFTC regulated, right? They also cash settle, and they're offered for trading on CFE the same as the previous futures, but they are CFTC regulated. So these are based on the Cboe Kaiko reference rates, right? Not the FTSE ones, which were the FTSE index. Small differences, but important to know. And you know, you get a lot of the same benefits, right? So you have price discovery, you have capital efficiency, you have standardized contracts because it clears through Cboe Clear US, which reduces your counterparty risk. Here's, you know, we showed you a chart earlier of the options. Here's a chart of the futures, right? So the financially settled Bitcoin futures and the financially settled Ether futures, it shows you the exposure 0.1 Bitcoin or 1 Ether. You know, what's the minimum price increment? What are the indices that it's based off, and what are the trading hours? Again, I've put some links here, right? So when you get the slides, you should be able to get access to all the detailed product specifications, the product use cases, and Cboe's details using these links. If you would like to get access to it now, you can use these QR codes, scan it. I've tried it out in the morning. The QR codes work, which, you know, this technology is decades old. It still amazes me, so I love it. And I think that's the end of my prepared remarks. Gianni, I'd open it up to you if you have any more questions for me, or if the audience has questions.
Fantastic. No, that was excellent and very informative, Nishank. Thank you so much for that. I do have my chart of Bitcoin up on the screen here. Just want to take viewers just through what's going on and what's been going on here in Bitcoin. Obviously, we are in an uptrend, right? You're making higher highs and higher lows. But I think what interests me the most as a trader is the fact that, you know, Bitcoin struggled to get back above 110,000 for about 7 months. And so we call that a technical resistance zone, basically an area in the market where supply tends to exceed demand, and that prevents prices from rising. But just last week, we broke above there. And when resistance breaks, it becomes support. So for me as a trader, that is the big sand that I'm watching now, is that 110 level. Above there, I do like the prospects for Bitcoin to continue higher. I heard you throw out the $150,000 mark. That is an area that I'm watching, of course, not trading advice, not investing advice, but, you know, that is a target that I have been keeping for Bitcoin for many, many months now. So, you know, you did hit that new all-time high a few days ago, been consolidating those gains, going sideways, which is a pretty good sign. But, you know, the big mover this week is Ethereum. And I think that some of the legislation that is coming down the pipeline here in Congress, we did pass some of those bills yesterday, is going to be more consequential for Ethereum than Bitcoin, because there's a lot of interest in the Ethereum infrastructure. So that's actually a segue into the question that I was going to ask you, Nishank, is when do we have Ethereum index options? My understanding is you need 10 ETFs. Do you have 10 ETFs that you like there at Cboe yet?
We're getting there, Gianni. We don't have that yet, but it's something we're actively monitoring. We've seen the demand from clients, right? We really have.
Yeah.
Like, this is, we've seen plenty of reverse inquiries. People want it. Our clients want it. We need to make sure that we have enough liquidity. When we do launch it, we'll do the same. If we launch it, and, you know, if and when we launch it, right? Like, there's no guarantees. But you have to go through processes, right? You have to make sure there's enough underlying ETFs, and then you have to make sure there's enough market makers that will provide liquidity on options on Ethereum. What you don't want is, you don't want to launch a product that has no liquidity.
Absolutely.
So that's something that Cboe takes very seriously.
I do have another question, kind of separate, and I came up with this question from just your overall work with the VIX and stock options and whatnot. Do you think, or will there ever be a time where we have a crypto volatility index?
Great question. It's also a question that gets asked very, very often of us. The answer for that is it depends on how mature the Bitcoin options ecosystem becomes. In order to create a VIX-like index on any product, right, whether it's S&P 500 or anything else, you need to have a very deep, very liquid, very mature options market. I think we're on our way to getting there, but we aren't there today. So let's hope
Yeah.
this market keeps deepening. Let's hope the liquidity keeps improving. Let's hope we see more strikes, more terms, more volume. And if that keeps happening, if we go in that way, that trend keeps going, hopefully, right? I can't promise, but hopefully we'll have a volatility index on Bitcoin.
Yeah, I mean, if anything, that's probably going to help make that market even more liquid. And then,
Right.
it's all about hedging. And so, the more institutional this crypto market becomes, the greater the need for hedging. Like you said, Bitcoin has kind of become the kingmaker of crypto. But, with the way things are going with cryptocurrencies such as Ethereum, Ripple or XRP futures are coming down the pipeline as well. They're starting to trade. So we're going to see an introduction of these things. And remember that all of these products that are being launched around these cryptocurrencies are legitimizing the asset class, legitimizing those coins. And it's going to kind of make it more institutional. But, if you want those big returns to come later down the line, there needs to be some institutions playing in the market to generate those moves. So I'm excited about a potential crypto volatility index. I think it'd be very good for the crypto ecosystem.
Feedback received.
Yes, great. I know you had a couple other slides on there just to how to stay in touch and continuing learning with Cboe.
Absolutely. Do you have those slides handy? There you go.
Yeah, they're right there. Yeah.
So again, if you want to keep in touch, right, reach out to me, right? My email is nmodi@cboe.com. You can reach out to my team, Cboe Labs @cboe.com. We do have an event coming up in Munich this year. It's RMC, the Risk Management Conference. It's the 40th anniversary of this conference, and we really discuss all things volatility related. A lot of it is equity vol, some of it is credit vol, credit futures, credit derivatives. Increasingly we talk more and more about the crypto space, right? Because that's now being adopted by institutional players as well as other players. The attendee mix there is institutional RIAs, family offices, vendors, indexers, the whole gamut. And then lastly, right, you have these two QR codes. The first one will give you access, or it will take you to a page that shows you all of the information that we have on the options, the Bitcoin options that we spoke about, right? The Cboe's Bitcoin options. And the second one will take you to the page that takes you to to our FTSE Bitcoin Index futures. Our web pages have a wealth of information. Feel free to check it out. You will be getting these slides later, so hopefully, if you've missed out or you want to go back and refer to any of the points that we spoke about, you can go through the slides.
Excellent. Well, Nishank, I know that everything you explained was very well received. A lot of great feedback in the chat, so thanks again. Let's see. Do we have any final questions here? I think you explained everything so well that I don't see any other questions. So that's always a good sign. And again, let me just pull Bitcoin, even Ethereum back up here on screen real quick just to see what's going on. Bitcoin kind of quiet on the day. Ethereum hanging out near its multi-month highs. But I got my trend lines and patterns drawn on this chart. Just keep in mind, Ethereum still has not made a new all-time high since 2021. So it does suggest that the trends that are in place now may continue. And of course, that can all change. So we stay nimble, we stay, managing our risk. And that's what trading is all about, is just managing risk all the time. And options are a great way to do that. So Nishank, just want to thank you again for a great session. Always a pleasure. And thank you to all of our viewers for tuning in today. I always love being live with Benzinga. It's always a great time, and we appreciate you all. So let's see where this run in crypto takes us. But the beautiful thing is with options is that whatever direction the market is moving, there is an opportunity to profit, and it's all about risk versus reward. So thanks again, Nishank.
Thank you, Gianni, and thank you all for listening in.
Excellent. Well, that's going to do it for today, everyone. Appreciate you tuning in. Again, the slides will be available to you. Just send us an email here at Benzinga, as well as the recorded session. So I know many of you found it informative. I always pick up on some things here and there as well. But as for me, it's back to getting to trading here because this market's on the move, and I don't want to miss anything. So you're in the right place to be up to date and up to the minute with all the latest developments. So thanks again for watching, everyone. We'll see you next time. Take care.